Hello guys, welcome to this YouTube channel. We're going to be looking at the smart money concept alongside the price action trading methodology. First, I would like us to understand that there is no trading methodology that is wrong. The success of a trading methodology all depends on the trader's mastery and right application of the trading methodology. So as we head to the charts to actually look at how to apply the smart money concept and also the price action trading methodology towards high probability trade setups, I would want us to understand that SMC or price action trading, none is actually the holy grail. So it's all about mastery by the traders that applies this trading methodology to their trading system. So now let's head to the chart and backtest the application of the smart money concept and then the price action trading methodology as a confluence mechanism for high probability trades towards high profitability. Now you can actually see from this chart here, we actually have the break in market structure at this particular low. So this is where we actually have our break in market structure. So you can see that now we have price return to the upside and created a inducement here. So this is where we have our inducement. So you can see we have our high at this particular point here. This is where we have our high points here. So you can see we have our high points here, and then we have this low points here, which is our lower low, and you can see we have the breakout structure. So you can see this is actually the pullback before the break in market structure. So we have our inducement here, and then you can see that the market pushed to the upside and then took out this inducement. Now you can see that what we have is actually the move to the downside here, went further and then broke the structure to the downside here. So you can see here we have a valid break in market structure because you can see a body candle close below this low points. So we have a valid break in market structure. So we are going to be looking at how to actually apply the smart money concept alongside the price action trading methodology in order to actually establish high probability trade setups and to establish confluences towards high profitability. So you can see that we have a valid break in market structure here. So we actually have a newly created lower high point here, and then we have a newly created lower low point here. So you can see we have this high points here, and then you can see we have this low points, newly created low points here. So what you're going to see is that what we have here is that the price pushed to the upside. Now you can see the market fell to the downside. We have this pullback, which is our inducement, but then the price again fell to the downside and then created this pullback. So we have our newly created inducement over here. So you can see this is where we have our inducement. So the market fell to the downside, gave us this first pullback. Price went further to the downside, gave us this pullback. So this is our inducement. So you can now see that the market again gave us this pullback to the upside, raided the inducement, and then we have price fall to the downside. And then you can see we further have a break in market structure here. We have this break in market structure. So you can now see that when price fell to the downside here, we have this valid pullback to the upside, and then price fell further to the downside. We have this valid pullback, price fell again. We have this pullback before the break in market structure. So meaning we have our inducement resting here. So we have our inducement high points here. Now you would see that market rated the inducement pullback to the upside. So we have this as our newly created high points. So you can see that now price fell further to the downside. You see we have this breakout structure. So now you can see we have the market again for the push to the downside, and then we have our breaking market structure here. We have a valid breaking market structure to the downside here. So we are going to be looking out for the inducement, and this is actually our inducement. This is the pullback created before the break in market structure. So we have this as our inducement high points. So you see price fell to the downside. We have the return, took out the inducement. So we have this newly created low points here. We have the newly created low points here. And then we also have this newly created low points here. So you can see then we have this high points here. And also we have this newly created high points here. So we can now see again that the market broke structure to the downside here. You can see that the market broke structure to the downside here. So we have actually a valid break in market structure. So we are going to be looking out for the inducements that needs to be taken out. So you can see this is actually our inducements before the pullback, before the break in market structure. But you can see this return did not read this high points. So meaning this is also our inducement zone. But then we can see that price further fell to the downside and then took out this low point. And then this is actually the pullback before the break of this low points. But then we can see that once this low point was broken, you can see we have a valid pullback to the upside. So this becomes our inducements. This is now our inducements. So this high point becomes our inducements. And then you can see this is where we have our newly created low points here. Because now you can see price push to the upside, readed the inducements. So what we actually have resting here is actually our liquidity pool, because we can see relatively equal highs. So we have actually successfully marked out the structure. So we are going to be looking at our POI from the smart money concepts trading methodology. And then we are also going to be looking at how to actually take our entries by applying the price action trading methodology. So we have this newly created high and then price pushed to the downside and broke structure. So you can see that price returned to the downside here, went back up. You can see this zone was mitigated by this return to the upside. So you can see we have this fall again, price went, mitigated the order block resting here. So you see we have the push to the downside that broke structure here. So meaning we have our order block resting here. So this is our order block resting here. So we have our extreme order block resting here. Now, once price broke structure to the downside, you can see this is where we actually have our inducements. So we have our inducement resting here, but then we have this as our decisional POI zone, where you can see that the order flow here has actually been mitigated. You can see the order flow here has been mitigated by this move to the upside. So this actually would serve as a smart money trap zone, because you can see that the order flow has actually been mitigated by this return to the upside. And if you're also going to look at it from the order block perspective, also you can see this is the last buying candle before the sell move to the downside. You can also see that the order block has actually been mitigated by this return to the upside that actually gave us the inducement zone. You can see the order block itself has been mitigated by this return. So this is actually a smart money trap zone, because traders will actually be expecting to possibly take entry at this zone because they feel this is actually a fair value gap. But the actual order block is this bullish candle to the upside before the sell move. But we can see this return actually mitigated the order block. So what do we have? It is actually this zone above that is left to be what? Mitigated. So we have, this is our order block. Ideally, this is actually our order block, the entire move to the downside. This candle here is actually our order block. The bearish candle is actually our order block, because we can see the bearish candle moves to the upside and then took out the high of this bullish candle before falling to the downside. But then we can now minimize it to consider this order flow, this minor order flow here, as the zone in which we are expecting our return to take entry. And then you can also see that we have what's the fair value gap resting here. So you can see we also have the fair value gap resting here. So you can see from the smart money concept trading methodology, I'm going to put my entry at 50% of the fair value gap, and then my stop loss slightly above swing high, and then my target would be the swing low resting here for the profits area. So we're going to target the swing low as our take profits area. So this is where we are going to be taking profit from. Now, this is actually from the smart money concept trading methodology. So we're going to look at what about the price action trading methodology. What are we going to be looking at in order to take this entry, in order to establish more confidence? Now you can see that now from this pullback, you can see we have a bullish market move to the upside. You can see we have a bullish market move here to the upside. So price is what? Moving to the upside. Yeah. Let's actually take this outward. So you can see we have price what's pushing to the upside, giving us this bullish move. But then you can see we have the price coming down. So we are going to have this wedge triangle to the downside here. So you can see we have this wedge triangle to the downside here. Price broke through the wedge triangle zone. So what we are going to be doing is once we see the break of this trend line to the downside, so at the close of this candle, what we are going to be looking at is actually to take entry at the close of this candle here and to place our stop loss above the high of this other trend line here. So then how do we now actually project the take profits zone? So we're going to put our Fibonacci tool from this low to this high point here. So you would see that our target profits area is going to be the 1.618 level. So we're going to project this to the 1.618 level. So this is where we want to take profits. So you can use the Fibonacci tool to determine your take profits level when you're actually looking at the price action trading methodology. Why? Because you can see that from the smart money concept trading methodology, what we have is that this leg move has already been created. So we are targeting the low points of this leg move, of the impulsive move. We are targeting the low points. Since what we have now is price returning to mitigate our sponsorship candle here. But you can see from the price action trading methodology, what we have is actually we entered at the break of this trend line. At the close of this bearish candle, we took our entry at the close of the bearish candle. So our stop loss above the high, and then we now use our Fibonacci tool to determine our take profit level. So now you can see that now we are in this trade using the smart money concept trading methodology, and also we are in this trade using also the price action trading methodology. So you can see that at the break of this trend line, we actually took our entry here. But from the smart money concept trading methodology, we waited for the break of the structure and then a return to the upside to mitigate this unmitigated zone. Because what we can see here is that this is actually a smart money trap, because this order flow has actually been mitigated. Also, the order block has been mitigated. So what is left unmitigated is the zone above. So now, you can now see that also from the price action trading methodology, you can see when price again is also returning to the upside, because now you would see that you have a value breaking market with structure here. So what you'll also be expecting is also this return that is coming back also based on the smart money concept trading methodology. When price is returning to the smart money concept zone, you would see that from the price action trading methodology, you have your trend line here. When you project this trend line outward, so you would see that this trend line came out, and then you can see that it's also in confluence to the order block zone. It is also in confluence to the order block zone. So you can see you can take the entry also from the price action trading methodology, which also establish confluence with the smart money concept trading methodology. And then you also now project this low as the take profits zone. So now we can now see that now we have markets break structure to the downside. Now from actually the price action trading methodology, you would see that we have the possibility of also having another form of entry once this price is also coming to the upside. Because what you're going to see is when we project the trend line, we're going to have this move from this zone. We're going to have this move from this high point like this. So you can see we have the first touch, we have the second touch. So you can also see from the price action trading methodology, once price again is returning to the upside to retest the trend line, we can actually take our entry again at the trend line zone. At the trend line zone, yeah? And then our stop loss should be above this high point. So we can set our stop loss above these high points and also still target the low points. Yeah. So this is also from the price action trading methodology because you can see the trend line here. Then from the smart money concept trading methodology, what you would see is once price mitigated the sponsorship zone, what you would see is that we actually have a change in market character here. We have this change in market character here. So what we are going to be expecting is the return to the upside. So because we have this as a POI zone, because you can see we have gap of liquidity here. Price swept the high of this return to the downside. Price swept the high. So this is actually our sponsorship candle to consider here. So you can see that now we can also take entry based on the smart money concept trading methodology from this zone here. We can take our entry here and then our stop loss here. And then we project our take profits to the downside here. So you can see also, we have minimal stop loss looking at it from the smart money concept trading methodology. So now, I know the chart is going to be a little bit confusing, but just follow up and then you will understand what I'm actually showing you guys here. Now you would now see also that now we have price fell to the downside. We have this break in market structure here. Now what we are going to also see is, so let me clear up this chart so that you would not actually be so confused that we continue. So now I've cleared up the chart. So now let's continue so that you would also see other more ways in order to apply the smart money concept and the price action trading methodology. So you can see now we have a breakup structure here to the downside. We have our inducements here. Now we have the return that rated what are inducements. Now you would see that from the smart money concept trading methodology, we have this is our inducements here. But then now you see we have our order block resting here. So from the smart money concept trading methodology, we have our decisional POI resting here. This is where we have our decisional POI. And then we would now look out for where we have our extreme POI. Now you would see that this is not really a POI zone. This is not a valid order block zone because this pullback is just an inside move within this bearish movement to the downside. Forms of sponsorship candles here have actually been mitigated. So we do not really have, you can see this order block has been mitigated by this move to the upside. We have this return, price went to the upside. What we have unmitigated here is this week and also this week. So we can see that this is where we have our unmitigated week. So we have, this is now our extreme POI. And then this is now our decisional POI. So what we are going to see is, since this is our decisional POI, meaning we are going to have entry here based on the smart money concept, and then our stop loss above it. So you would see that what price return to the upside, price just reacted a little and then push further to the upside. So we have our stop loss rated at this particular entry. So what we have left is actually this unmitigated week. And then we can also see we have fair value gap resting below the unmitigated weak. So we can now take our entry at the 50% of the fair value gap, and then our stop loss are both the high, and then we target the sweep of this low points since we have the newly created low. So let's move this to this side. We're going to be targeting the low. This is what we have based on the smart money concept trading methodology. So when we are going to possibly look at what we should anticipate from our price action trading methodology, you can see we have a downtrend, a push to the downside. Now you can see we are going to have our trend line. We have our first touch, our second touch, and then you can see we have this fall to the downside here. You can also project this. Let's project this more further here. So you can see we have our trend line here. So you can see we have the first, touch, the second touch, price fell to the downside. Now you can see what we have coming back is actually that touch, and then you can see price mitigated the trend line, and then you can see based on the smart money concept, we have this unmitigated weak, and then we have this fair value gap here. So we took entry at 50% of the fair value gap, and then our stop loss slightly above. And also from the price action trading methodology, you can also see here what we have is a confluence of the price action trend line zone and then the smart money concept sponsorship candle. Now also you can also see we have this push to the upside here. You can see we have this push to the upside here. We have this push to the upside. We have the first touch, price return, the second touch, price came down. You see we have what? Price broke the trend line, returned to retest the trend line. We have more value break the downside. So what price action traders are going to do is to take entry at the close of this candle here, and then the stop loss above the high created at this retest. And then so for a more solid take profit area, we are going to use the Fibonacci tool to determine where our take profits zone is going to be. So we are going to actually take the retracement from the low to the high. So we are going to target this zone, the 168 zone, for the take profits. So you can now see that from the price action trading methodology, you can target this low created here at the break of this trend line, or you can use the Fibonacci tool to further push the take profits level. So you can now see that what we have now is a price broke this trend line. You can see we have this first entry based on price action at the close of this candle, and then the stop loss above here, and then you can see price fell to the downside. So this is based on the price action trading methodology, or you wait for the pullback to return into the smart money concept zone, and then you can see we have what? The trend line also, which establish more confluence here. You can see this is where we have the inducement. The inducement was read. We have this as our decisional POI, but it was violated. And so we have here as a valid SMC sponsorship zone. But you can see from the price action trader, we can also take entry here. So you would see that price came to the downside. This is your first take profit area. So you've taken your first profits here. We can see price return and then read the stop loss and return into the smart money zone, and then in confluence to the price action trend line. And then you can see we have the fall to the downside here. Now you can see we have this pullback to the upside. This is the first pullback before the break in market structure, meaning this is actually our inducement zone. Now you would see that from the smart money concept trading methodology, this is the unmitigated zone left. So you can see this is our POI zone because we have price swept this high and then price pushed to the downside. This is our POI zone. And then you can see the POI zone is also in confluence to the price action trend line zone. So this is a more solid word confluence. So we can also take our entry from this sponsorship can do from our order block zone, and then our stop loss are both the high of the order block, and then we target the slope. So you can see we have the confluence of the price action and also the smart money concept. So you can see now we have the fall of price to the downside. So you can also see that we are going to have more further confluence when we also project our trend line from this pullback like this, you can see, which is going to give us the power of X, the trend line trading strategy, which is called the power of X. Because you can see at this point, you have the trend line coming from the upside, and then you have the trend line coming from the downside, meeting at this point. This is actually the power of X zone. You can see price fell to the downside. So you can see this is how you can also actually utilize the smart money concept and also the price action trading methodology in your trade. So I believe you found value in this little thing I have to show you guys.